Which semiconductor ETF is better, SOXQ or SOXX? Good question. I'm glad you asked. In this video, we're going to discuss that. SOXQ versus SOXX Semiconductor ETF. Welcome back to another episode of the MD Investor. Before we jump into my computer to look at these two semiconductor ETFs, just remember I'm just a regular guy on YouTube and I'm not a financial advisor. I'm just giving you my opinion on YouTube. Let's go. So here we are in my computer on the ETF.com website. We're going to compare two semiconductor ETF. SOXQ is on the left and SOXX is on the right. SOXQ is offered by Invesco and SOXX is offered by iShares. The cost of each share, SOXQ is about $37.85. SOXX is about $220. Invesco issued the SOXQ and BlackRock issued SOXX. One of the key differences between these two ETFs is the expense ratio. The expense ratio for SOXX is 0.35 or 35 basis points, which is $35 for every $10,000 you have invested annually. And the expense ratio for the SOXQ is a lot cheaper. It is only 0.19% or 19 basis points, which would be $19 for every 35, which would be $19 for every $10,000 invested. So it's about half the expense. The inception date for SOXX is July 10th, 2001. The inception date for SOXX is July 10th, 2001. It's not here on this chart. But the inception date for SOXQ is June 11th, 2021. So obviously, SOXQ is much newer, less than 3 years. And SOXX has been around for about 23 years. So that's another key difference, right? There's more data for SOXX, right, over 20 years, and SOXQ is less than 3 years, so it's newer. Assets under management is also a key difference. There's about $12.5 billion in assets in SOXX, and there's only about $376 million in SOXQ. Obviously, it's newer. People maybe don't have, so obviously it's newer. There's less data. There's less information to be tracked. And sometimes people are a little hesitant about investing in something so new. The average daily volume, again, as you'd expect, is much heavier in the SOXX ETF because obviously more people are trading it. $790 million worth of trades daily, and only about $8.7 million in SOXQ daily. The index track two different indexes. The SOXX ETF is tracking the New York Stock Exchange Semiconductor Index, and the SOXQ is tracking the PHLX Semiconductor Sector Index. There's about 31 holdings in SOXX and about 32 holdings in SOXQ. So that's pretty similar. Let's look at the returns. So you have SOXQ on the left, and you have SOXX on the right. So we see year over year, the 1 year return. See, this is June 2023, and here is May 2024. So you see they're tracking very closely, right? They're very close return. Now let's look at the chart. So for the year to date, so the 1 month return for both the SOXQ and SOXX, they're both down about 2.32% for SOXQ and about 2.89% down for SOXX. The year to date returns, they're pretty similar. SOXQ is up about 14.3% and SOXX is up about 13.69%. So they're both pretty, both have almost equal return. The 1 year return, also similar. SOXQ up about 61.86%, about 61% for SOX. 3 year return. Notice there is no 3 year return for SOXQ because we said the inception date is June 11th. Because we said the inception date is June 11th, 2001. So it had not been in existence for 3 years. So we only have the 1 year return. The 3 year return for SOX is about 16.75%. The 5 year return is about 27.97%. And the 10 year return is about 25%. So we see here that we only have one data point for SOXQ, the 1 year return. Obviously, as time goes on, right, in June of 2024 or June of this year, we'll have a 3 year return data point. But as we get to the holdings, we'll see that the holdings are pretty similar. So we could extrapolate that the return is probably going to be pretty similar and probably better for SOXQ, I would imagine, because there is a lower expense ratio eating into the returns. But that's a key difference, the expense ratio. So let's dig into the holdings. SOXQ again on the left and SOX on the right. We see NVIDIA is the top holding in SOXQ as well as in SOX, right? But in SOXQ, it's a little heavier weight. It's about 13.3%. In SOX, it's about almost 9%. The number 2 holding in SOXQ is Broadcom at about almost 10%. The number 2 holding in SOX is also Broadcom at about 8%. They have Advanced Micro Devices is number 3 at 6.27%. And Advanced Micro Devices is at 6.3% in SOX. So that's the number 4 holding. Qualcomm is the number 3 holding in SOX at 7.12. And Qualcomm is about the 5th holding in SOXQ. So they're very similar. They're very similar. Taiwan Semiconductor, 4.4 in SOXQ. It's about actually Taiwan Semiconductor is the 5th holding in SOXQ, but it's not here in SOX. Taiwan Semiconductor is not here in the top 10. We have Texas Instrument at 4.39%. It's very similar in SOX. Analog Devices at 4.2, and it's 4.26. Microchip Technology at 4.23, and it's very similar, 4.34. NXP Semiconductor at 4.14. NXP Semiconductor. So really, the only thing that I don't see in the top 10 in SOX is Taiwan Semiconductors. Yeah, Taiwan Semiconductors is in SOXQ, and SOX has Intel. I think that's the only difference I see. But otherwise, it's very similar. Similar composition. Most of the companies, almost 90%, is in electronic technology. Producer manufacturing, also very similar. So, what's the final verdict? SOXQ or SOX? SOX Semiconductor ETF has been around longer, right? Over 20 years. And SOXQ has only been around for less than 3 years. So there's more information available. And there's more history available with SOX as opposed to SOXQ. The holdings are pretty similar. The returns over the year to date and the 1 year time period have been pretty similar. The holdings are pretty similar. One of the differences that we can look at is the expense ratio. The expense ratio is 0.35 for SOXX and only 0.19 for SOXQ. So almost half as cheap for SOXQ. So that may be something to consider. Except for the expense ratio and the fact that SOXQ is a newer semiconductor ETF. And I believe SOXQ has, and I believe in the top 10 holdings, they may have, and in the top 10 holdings, they have nine of the top 10 holdings are the same in both, right? Only one is different. So it's very similar. So the price and the age of inception are the two things to look at. If you want more track record, you can go with the SOXX if you feel more comfortable. If you want something with a longer history, you can go with SOXX. If you like something with a cheaper expense ratio, you may want to go with SOXQ. Because over the long term, I believe SOXQ will have a better return just because you're spending less money on expenses. Again, guys, the MD Investor with another video to increase our financial IQ so we can break the cycle of generational poverty. And shout out to my subscriber who suggested this video. I will see you on the next one.